Welcome to Ways to Love Your Money, Season 5. I'm Elizabeth Dawson. We're so happy that you're here. Thanks for listening. We're going to have a great interview today with Mr. Stephen Goodman. You're not going to want to miss it. This is for business succession planning. This is for legacy planning. There's so much more. We really wanted to emphasize more on this subject of retirement, but I think that there's going to be a little spin to it with our conversation. And we also want to congratulate women for Women's History Month and an emphasis on this. You know, when we talked to Steve, initially it was about, the traditional business owner today are mostly men. Obviously, I'm a business owner, I'm a woman, so we can't be more excited about empowering women to create that role, because eventually one day you're going to be that business owner if you are part of that. So business succession planning, legacy planning, really for the higher net worth client is this interview. And we can't wait for us to have this interview in front of you with Steve. He's going to be a wealth of knowledge and just perspective, and procrastination is not the answer. So stay tuned. We'll be right back. Welcome back to Ways to Love Your Money. I'm Elizabeth Dawson, and no more wait. We have Mr. Stephen Goodman here with us, and you are not going to want to miss this interview. Stephen, thank you so much for being here. I'd love for you to tell us a little bit about what you do and really the impact of what you're doing for families and business owners in the succession planning world. Thank you.
Elizabeth, thank you for having me. My background started out in public accounting. I'm a CPA. I worked for one of the big firms, KPMG. Also worked for JP Morgan in their private bank trust and investment division. I have my master's degree in finance. For 30 plus years, I have run my company, SHG Planning. And, basically what I do is high-end sophisticated business succession and estate planning for high net worth individuals and ultra high net worth individuals, many of which own closely held family businesses.
You know, that's a topic that most people don't necessarily hear about. You have really hyper focused in an area where, everyone needs help, but that area really needs help. I wanted to kind of maybe bring this portion into it as, a financial planner to a financial planner here. We now are kind of approached with potential estate tax law changes. So I'm sure you have some new ideas about how that might be structured. What's been on your mind about that with your clients at this point?
Well, look, when you get involved with succession planning, there's an element of it that is geared to tax planning, but there's an element of it that has nothing to do with tax planning. So even if there were no estate taxes, or somebody's estate is at a level that there are no estate taxes, there is still some significant succession issues that people have to deal with. And if they don't deal with it properly, it's going to cause a lot of issues in their family, both while they're alive and when they're no longer here. The estate tax side just makes it sometimes a little bit more complicated and difficult, because there's a partner, besides the partners being the family, now you have a partner being the government.
Very well said. So what are some of the things that families out there need to be thinking about, basically even for the legacy transfer of wealth to the next generation? What are some of the big topics that you think that need to actually, be addressed and not just wait and procrastinate on?
Well, I'll try to answer it in a slightly different way. What I always tell people, there are two major reasons that I find people don't adequately plan. The first, as it relates to succession, the first is that entrepreneurs by their nature are go-getters, and they're always putting out fires in their business every day. And to plan means to take time away from what they need to do today and place it in doing something that's going to benefit their family in the future. And that's a very hard thing for entrepreneurs to deal with. And even if they actually start to plan, they generally will procrastinate and postpone meetings, because they'll say, I can't meet with you today. Something came up. It's urgent. I'm meeting with my accountant, my banker. I'm having a problem with one of my customers. So keeping the momentum of planning, very, very challenging with an entrepreneur. I'd say that's one of the two biggest reasons. The second biggest reason is a more emotional reason. And that is that as a business owner, I always give the example, I have a couple of children. They happen to not be in my business, but all throughout life, I've had to tell them a million times how I love them the same and I'm going to treat them equally. And, they play you against each other, as they're growing up, whether it's who gets a lollipop, who gets a phone, who gets a car, who gets a TV. And then one day you wake up and you're 65 years old and you have this big business and you got two or three kids and maybe one of them's in the business and one or two of them are not in the business. And then you sit there and go, holy smokes, I've told my kids all through life, I'm going to treat them the same, but am I going to really treat them the same? Am I going to leave the business to my three kids when only one's in the business? And if I leave it to one, I don't have enough other assets to leave things to my other kids. And like somebody's going to get pissed off. And if my kids don't get pissed off, their spouses are going to get mad. And so a lot of times the business owner, who generally is a man, in that 65, 70 age category today, it's changing, but today it's still mostly men that are running those businesses. The father says, you know what? I don't want to jeopardize a relationship with my kids, and I don't want to jeopardize a relationship with my grandchildren. So I'm not going to do anything. I'm just not going to address it. I'm going to just let it go. And when I die, they'll kill each other. And the worst thing they could say is, my dad was stupid and he didn't do planning. That rather than saying, oh, I can't believe my dad actually thought this thing out. And this is how he came up with a conclusion. And he never told us. And like now brothers and sisters are suing each other and they're not getting along. So that's really what I find is the two major reasons people don't plan: the time and the emotional component.
That was incredibly well said, because it's very true. The majority of business owners, even including myself, I have two children, and I was thinking, gosh, how am I going to deal with this? And I actually did some estate planning more recently to basically make sure that the business would continue, and there wouldn't be any argument with my business in the event that I died, for the benefit of our clients and our resources that we've created. I didn't want my kids come and try and run the business, which every business owner, every entrepreneur always dreams about having their children run their business. Doesn't usually always happen that way. I think you just mentioned that. So when you're talking to business owners, or when you actually get their ear, how do you get them to commit? How do you get them to basically make this a priority and not give you all the procrastination or the excuses not to come in?
I wish I could tell you that I'm always able to accomplish that. I'm not. You know, uh, no matter how much I have to offer, some people just don't want to give it the time. What what gives me a little bit of an advantage is generally, unlike their accountant or their lawyer who have multiple roles to deal with, this is the thing I'm really brought in for. So if I can't get them to do this, I don't really serve a purpose. So I'm not worried about, oh, I don't want to piss off the owner because I get paid $50,000 a year in fees as their accountant. So I'm just going to let the owner do whatever he wants. I don't have any other roles. So I'm very good at, motivating people and saying, okay, here's an agenda for the next meeting. Let's put it on a calendar. And I'm not going to say it always works. It doesn't. Sometimes the business owner just doesn't want to deal with it and they're busy and it never gets anywhere. But I'm very good most of the time of motivating somebody to kind of stay on point. Another comment to make, which you were raising before about children, is a lot of times one of the most important things I try to discuss with an entrepreneur is, do you think your child is really equipped? Like, do they have the skills and the temperament to come into this business? And I also want to ask the child, that they want to come in and run this business? Because a lot of times children are in a family business because either they feel obligated to come into the business, or because they can't find themselves and they say, you know what? My dad's going to pay me 150, 200 grand a year. I'm never going to make that money working for somebody else. So you know what? I'll work for my dad, or my mom. So a lot of times it's not really what should happen, but it kind of just happens.
Well, let's fast forward into kind of a successful, planning process. Let's say your business owner, the higher net worth individual, they are now committed. They're using you as an incredible tool, and now we're here at this place, and we're in the planning place. Uh, they're thinking, is it more towards later in their career that they're starting to have these conversations more seriously, because that's when they want to come and talk to you, and then come into a game plan where they're actually evolving this into their estate plan and how they're moving this now to the next generation? Tell us a little bit of a story that has been a success.
Well, look, there's no question that the older one is, and the more friends or family they've seen deal with these issues, the easier it is to get the person to be motivated to have these conversations. The problem is that, and I'll give you a good example of a big problem that I ran into, and I've seen it multiple times. A lot of times, once the child comes in the business, it's almost like dad says, well, I'm not really ready to do succession. I mean, I don't really know if my kid's going to stay in the business. I don't know if they're really equipped to run the business. I don't know if they really want to stay in the business. So a lot of times early on, people don't do planning. And I'll give you an example of what I've run into. I come in and I meet with you and I say, Elizabeth, you're sitting behind this nice big desk in this big building, look like you have this really successful business. And I say, you know, what percentage of the company do you own? And let's say you're 50 years old and you say, I don't own any of it. And now I'm kind of thinking, I think I know where this is going, but I keep asking. So, Elizabeth, who owns the business? Oh, my mother. She owns 100% of the business. So now I kind of know what happened, but I keep going. So tell me what happened here, Elizabeth. Well, look, when I was 30 years old, I came into this business. My dad, wasn't really focused on this. My dad died at 62 of a heart attack, and he didn't do planning. His planning was, if he dies, he leaves everything to my mother. And when she dies, everything goes to myself and my siblings. So dad died. This was like 20 years ago. I was only 30 years old when I was in the business. And mom still owns the business. So then I go a little further and I say, well, let me ask you a question. How big was this business when dad died? Oh, it was like a $5 million business. How big of a business is it now? It's a $50 million business. So I'm assuming that you grew this business from 5 to 50 because dad wasn't here anymore. Is mom involved? No, mom doesn't even come into the office. She owns the stock. She's not involved at all. So you grew this business. Yes, I did. I go, so you do realize that when mom dies, the IRS isn't going to say, oh, well, because the son or daughter grew the business, you don't have to pay estate taxes on it. They're going to say, your mom owns it. So when she leaves it to someone, it's going to be worth 50 million. You got to pay estate taxes, even though you grew it. And then I say, just out of curiosity, you have two siblings, you told me, another brother and a brother and a sister. Who gets along best with mom? Oh, clearly my sister. She gets along best. She takes care of my mom. She's closest with my sister's kids. Who gets along worst with mom? Oh, I do, because I'm always fighting with mom over the business. I want to grow the business. Mom doesn't want me to take risks. I want to pay myself more. She doesn't want to pay me more. We're constantly fighting. So I go, well, do you know what mom's plan is? When mom dies, does she leave it to you? He goes, I don't have any idea. Not only do I have no idea, I don't even use the same attorney as my mother because I think there's a conflict. She's never going to tell me. So I go, you realize when mom dies, she can leave this business to you and your two siblings, and you're going to be a minority owner in a business that you grew. And he's like, yeah, I know that. Mom may not even give me any of it. He may leave it to my sister. Wow. So it kind of gives you an example that it's never too early to plan, because even in a situation like that where it's understandable why somebody will not plan, there's always got to be a plan. Now, maybe their dad could have had enough insurance for mom, so mom could have felt like, okay, I don't need to keep control of this business. I was left enough money. I'm comfortable. And as I always say, there's a difference between a mother and a wife and a widow. A widow acts differently than a mother or a wife does, because especially if she wasn't involved in the finances, she gets nervous. So if dad would have given her some liquidity, she may have felt more comfortable letting the son or daughter kind of grow the business and maybe pass the business to them. But that was her main asset, and she needed that income to feel comfortable, and thus she wanted to keep control.
Again, a very important point. Now, you know, uh, today, what we always talk about, and I'm sure this is something that you probably bring up too, the importance of if the business owner is a man or the business owner is a woman, to explain this to their spouse and what they can expect from it. If they didn't do any planning, this is where we have that situation where people just don't know. And like you just mentioned with this mom or the wife, um, she didn't really know, but the son grew it, and now the son's having a difficult time. Um, running well. He's grown the business, but he's having a difficult time. He doesn't even know where he stands in the business. And you mentioned something that I think is really important. $50 million business. Now they go to sell it, or now mom dies, and what happens? I mean, we've got a big tax to deal with, and I think that's a big thing with family-owned businesses, that they don't necessarily realize the big tax that's going to be due. And if they don't have enough liquid assets, they might have to do a fire sale of the business. The business could implode, or the estate could implode. So having these conversations, I think, with these higher net worth family businesses or business owners in general, I think is so important, because maybe at one point the business wasn't making as much, but then it's going to continue to grow and be exponential like everything else. And a lot of wealth is built in these businesses. So did you come up with a solution for this particular story?
In that particular case, unfortunately, since time had passed,
Yeah.
you know, some of what could have been done can't be done anymore. In that particular case, I did have conversations with the mother and with the lawyers. And part of the issue there is I kind of got into that business through the son, who, through a friend of his. And the problem in that particular situation was it was hard for me to be trusted by the mother, because I didn't get brought in by her. So I was really meeting with the wrong person in that particular case. I would have been better off having been brought in to meet the mom and her advisors than the son, because he's not in control. And because of how mom and the son relationship was, that's an example where it didn't work. Like, I'm not dealing with the right person. If I was brought in to mom, then what ends up happening is, okay, what kind of discounts could we take on this business? Could we have voting and non-voting stock? Could we give away non-voting shares to the son right now to try to take a major discount, either through gifting, through a grat, through a sale to a defective trust? Obviously, we don't have time to get into detail on all of these ideas. Then the question is, what else does mom have? She has two other kids. Yes, the son deserves a lot because he grew the business, but she's not going to want to leave her other children with very little. So the question is, mom's assets, if 50 million is the business, the rest of her estate maybe is $10 million. There isn't enough other things to give the kids, because there's going to be estate taxes when mom dies. Plus, she wants to leave something to the other children. So a lot of times in these situations, life insurance is vital, because it could provide liquidity to the son to pay taxes. And it also could provide money to the other kids to leave them something of substance, so that mom doesn't feel like she didn't treat those kids fair. Equal is never going to happen, but fairly. Obviously there are other assets there that mom could be giving to the other children as a way to also try to even the playing field. But when it's so skewed towards one asset, and only one child's involved in the business, you're either going to have to buy a lot of insurance, or your other choice is you're going to leave the business to your three kids. You're going to give the voting stock to the child running the business. And then you've got to put in some very, very stringent restrictions so that the child running the business can't totally take advantage of their siblings. You want them to be able to make the business decisions, but if you're a subchapter S corp and a company's making $4 million of profit and I'm the son running the business, I could say, great, I'm just going to raise my salary to $3 or $4 million, and I'm going to pull all the profits out of the business, and my siblings who own 2/3 of the business aren't going to get anything. So, if you're gonna, you either have to give insurance and other assets to the other kids, or you're gonna have to tie them together. And if you tie them together, you're either gonna tie the hands of the one running the business because they're gonna be limited as to what they can do, or you're gonna give them that flexibility, but then you have to make sure that they can't totally take advantage and abuse their siblings because you as the parent decided you wanted to give your other kids some of the business so that they could get some of the benefit of that business. So that's where it becomes a very, very, very difficult situation.
Well, we're in a situation here where we're running out of time, but what incredible advice. Business owners out there, you're building something for profit. You're doing something to create wealth, not only for yourself while you're building it, but then also the next generation, your surviving spouse, your children, your grandchildren. I always say at one point, it's always going to be about the grandchildren. But if you procrastinate and you really don't think that these things are going to happen in your life, or you're not communicating with your partner about what the best strategies are, those procrastinations are going to be the sacrifice of what you give up in the future. So many times, I've seen widows that they said, well, my husband took care of this and I'm not going to change it. Well, there's so much that's changed and navigated through that. It's important to not procrastinate because the planning you do today will be the payoff in the future. I love the fact that Steve just brought in life insurance as a big tool, and there's estate planning and all these different resources to be able to create this. But guess what? If you're not healthy, you can't get it. So when is the best time to do things like this? When you don't think you need it, and when you're young and when you're healthy. I think incorporating whatever the business plan is for this family-run business to succeed, to be able to go into the next generation, I think it's important for you to, seek advice, get good advice. And if you want to hear from Steve here and you want to ask some questions, this is a great conversation we're having. I think you need to seek him out, or you're welcome to come through us. But Steve, how can people get in touch with you? And I know you have some books and some articles, and you're so well accomplished. It's an honor to have you on the show. But how can people reach you in the event that they are watching this and they're saying, "Gosh, I can't procrastinate anymore"?
Well, thank you very much. First off, if you go to stephengoodman.biz, you could download a free copy of a book I wrote on business succession planning. I think any business owner would get a tremendous amount out of it. It's not designed to be so sophisticated. It's more written for the business owner. You also can come to my website, shgplanning.com. I've written about 70 articles on all different subjects that you could download. And my email address is sgoodman@shgplanning.com. And in the COVID era, my cell is probably the easiest way to get me, 516-297-7390.
Steve, thank you so much. We're going to take that advice too. We're going to go and download those articles as well as, get a copy of that book. I think everyone else out there should do that too. As part of this show, we'll make sure you have a great link to that. And, we're just really honored to have you here. And thank you so much for sharing your wealth of knowledge and expertise in the questions that people just don't take time to ask. Again, thank you. I hope you'll come back on the show. We want to continue to hear some more successful stories and also the pitfalls. So stay tuned. We'll be right back. Again, thank you again, Steve.
Thank you.
Wow. We just had a great conversation with Steve Goodman. He is an amazing person, a CPA, a financial planner, but he's doing this for the higher net worth individual families. It doesn't mean we can't take that interpretation and bring it down to a higher, a middle net worth for the business owner. But it's pieces that you need to consider. Procrastinating on making decisions or thinking that one day it's going to happen is probably not the best business move on your part. So when we take into consideration what the importance of planning is, we've got to make the time. It needs to be a priority. If you have a business and all of a sudden there's an unexpected event of an early death and now you don't have a plan, what happens to the business? What happens to the value of that business? Are there taxes that are going to have to be paid because of net worth situations? Are there, is there something that's going to go to the surviving spouse if it's not documented? And do they even know how to run the business? Who's running the business? Who's creating the profit? Who's creating the actual cash flow and income? These are questions that you need to be asking. I have talked to many business owners that this has happened to, and spouses passed, now they're running the business, they have no idea what to do. Then there's children, there's grandchildren, there's a legacy involved. Life is good now, but boy, things change, especially with a family-owned business. Could estate taxes be a problem? And that is 100% true. It could be multiple millions of dollars, and if you're not prepared, that business is going to be suffering. And that business might actually have to be sold just to be able to pay the taxes. I've seen this with farmland families. I've seen this with, family limited partnerships, all kinds of things. So take this to heart. We do have a question that we want to actually ask from the audience, and it says, my partner and I do not agree on money decisions regarding investments or retirement. How should we move forward in our relationship and financial lives? That is a loaded question, because if you're going to break it down to you and your spouse or you and your partner that way, and the personal lives, there's a lot of different ideas of what to do. But if it's your partner in a business relationship, that can be catastrophic. It depends on how you own the business and what you're going to do. But if you have a 50-50 equal ownership, that could probably poise as a difficult situation, because how are you going to grow the business? How are you going to create wealth? What are you going to do? If it breaks down to an individual situation, well, this business owner, if it's his own individual thing, or this business owner, it's her own individual thing, you can decide what you want to do for those business conversations, those investments and business conversations. But I think all too much with partnerships, you got to be on the same place. You got to be on the same page. You got to be thinking and talking and communicating, and it's a team effort to be able to make your business a success. Entrepreneurial spirit is about success. It's about creating wealth, building that business, and then eventually one day you sell it, if you're very lucky to do so. But sometimes that's not always how the plan works out. This is time to seek out a financial professional. If you need to see Steve, if you want to talk to us and go through us, we can coordinate. We can actually help get the connections down. But this is time to take things serious. There's one piece I want to just point out. Early last year in 2020, Kobe Bryant died in a helicopter crash. It was very sad, very unfortunate. I believe, from what I've researched, he did planning, but he was a young man. Most young people, they have a very successful business or entity or whatever their structure is. They don't necessarily plan for those types of events because they're not thinking it's going to happen right now. So don't wait until you're in your 60s to be able to start doing this planning. And by all means, if you're in your 60s and you haven't done this planning, do it anyway. Do it right now. But if you're in your 40s, 50s, and it's going like gangbusters, this is the time to consider this, because it's only going to be exponential from here. That business is only going to be more successful. The net worth of that family is only going to be larger. And you want to be able to treat your family members equally, or your grandchildren, whatever it might be. But just know, life is guaranteed to change. Law is guaranteed to change. Taxes are guaranteed to change. But there's always something that we need to focus on. What's the most important place, and to create liquidity so people can make decisions. Hope you enjoyed the show. Hope you will take this as a non-procrastination conversation and get in charge of your business and control. Run your business for profit, true profit, and run your personal lives for profit as well. It's time to get in touch with us, 619-640-2622. Let us know what you're thinking. Let us know how we can help. And again, put your comments below. We would love to hear what you have to say about this. Take care. We'll be back again soon. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.